flight crew, please prepare for takeoff.
Me. All right. What's up, everybody? We are on another episode of Full Transparency Trading. Let's see what we made today. We bought home $17.42 on this account, $22.07 on this account, and another $500. So that brings us to $17, $22, $500, $3,400. The market's not doing much of anything right now, so we are going to go ahead and get off. But for my new people to ES trading, right? My new people to futures trading. My best suggestion to you, right, is to get in here and go into the micros of the NQ, micros of whatever, just the micro versions of whatever trades, right? And start practicing there. So let's say we're pushing down, it's currently pushing up or whatever, and I want to get into a downside trade. I don't care what I lose. I just enter
order filled.
Trade. Okay, so market's pulling against me. It's at negative 250, negative 375. If he pulls down here, we'll go ahead and we'll get out of this trade. Once it pulls up, it pulls negative. That's perfectly fine. We still made $1,700 on this account today, no matter what happens. So we are happy with the outcome. So this came on down basically to the 200 EMA and then bounced on back up. Let's check out the 5-minute. On the 5-minute, we're in an upwards trend from this nice little push down that we had here. Let's shrink this down just a little bit, make it a little bit larger. So you're getting in, right? And you're just trying to snag a little profit, get used to using this system. So let's close this down and let's enter a trade. You come down here, you click on the trade button, and you're gonna go to market, or you can go to limit. Let's say I want to enter limit and I want to enter a trade right here. I click 1, put it right there at that line. Make sure you click your take profit and your stop loss area, and then you're just going to click sell. I'm currently in a market order. I know that looks like chaos now that I've added this extra stuff. So let's do this. Let's close this out.
Order filled.
Order filled. Never mind. We're in the order. Let's go ahead and take profit.
Order filled.
We just made $3.75 just like that, right? So let's say we want to go market. You're going to hit your stop loss in that, and then you're going to click it.
Order filled.
Now you're instantly in a market. Let's say I just want to take profit because I'm just trying to set up so that I can get paid, right? And I've got as much money as I need in my account to actually get paid out. I just need to take profit really quickly. I'll slide this down here to a quick take profit area. And as soon as I see that turn green, I'll close. So we'll sit, turns green. And actually, since we made 250, we'll modify.
Stop filled.
And then our stop will be filled by our modification. And now we've made $17.45 on this brand new account. You know, but if you wanted to say do the same amount as minis, if I was doing minis, you just put 10 times the number that you would have. So if you have 1 mini contract, you would need 10 contracts. If you have 2 mini contracts, you would need 20. So no matter how many mini contracts you would use, you would need 20, right? But here's a unique thing. Let's say I have 10 full contracts open and I want to open another 10 more, but my account doesn't allow me to have more than 10 contracts. Well, the secret is this. I can open 1 mini or micro, right? There.
Order filled.
Then I can open up on the ES side 1. We only lose $25 there. And we'll open up 1 of those. Put on 50 just in case we get kicked out.
Order filled.
There. Order fills. Go to take profit. Trying to see it. There it is. So it's zeroed out. But look, we now have an order open for these.
Stop filled.
And an order open for these that's up $7. Isn't that a unique little
order
thing,
filled?
Guys? So we just I risked $50.
Stop filled.
I risked $50 just now, right? And I made like $60 between those two trades. Could have made like 100 or whatever the case is, but that's not the point. That's not the point. The point is, it's really easy to get in and out when you're in these particular trades here. But the coolest thing that I actually just figured out today is that you can in fact have minis and micros open at the same time. So now you have double the leverage. Let's say I wanted to go in with 20 mini orders. I would do 10 mini orders, start my trade, go over to the micro orders, do 100 micro orders by typing in 100 right here. Take profit, stop loss, $875, $2,500, and then I would click buy. Now we're gonna close out of this so we don't do that by mistake. But I just wanted to come in here and show you guys that it's not as difficult as you would think it is, right? To trade futures, you're just trading the price action. You're just trading if it goes up or down. You actually saw me put in a $50 stop loss just now. It came to $50, but it didn't exceed $50, so I didn't lose any money, and I gained $25. That's awesome. You know, that's a good trade. Made two good trades back to back, a mini and a micro at the exact same time. Super dope. Got $27.50 off of it. And that's just showing you guys how I enter and exit a trade. But that's the unique thing about futures is even if it goes against you a little bit, it doesn't matter because you're not trading with a theta or a delta or a gamma or a beta or a sigma pi or whatever it is or an alpha kappa alpha. You're strictly trading price action. So a lot of people are going to find this, even though it's day trading and it's basically like trading 0 DTE, you need to be sharp on your charts. It's a lot simpler overall than trading options because really there's nothing else to think of other than what the chart is doing and how much the money is moving. You know, and I just showed you guys, like, just like that, $25. You know, if that's you're starting out, you're just trying to make $25 a day, $50 a day. It's pretty easy with just one contract to make 25 bucks. With one contract to make 50 bucks. You know, you don't need to go and over leverage yourself. I actually advise against over leveraging yourself. I advise against using 10 contracts because what happens with 10 contracts, let's go to that really quickly. I'll show you guys what happens with 10 contracts, right? So with one contract, I can risk $50, right? And let's just do a limit order and I want to get in way down at 32. You know, and I would click buy. So if it came down there, I could risk all of this space and all of this space for one contract, right? Versus that's how far $50 gets you. Let's see what I would need if I did 10 contracts, how much that would cost me. 10 contracts, that's $500. You have to risk $500 to make $6,500, obviously, but the reality is, like, it's going to go like this. You're going to get about 10 to 20 in a move. So to make $25, $1 would knock you out. If this stock moved $1, it would knock you out. Versus if it moved $1 with a single contract, it's only going to cost me 50 bucks. You see how that works? Like, I'm trying to get 250. It's only going to cost me 50. So I can do a lot more. I can do $3, $4, $5, $6, $7, $8, $9 before I ever hit my stop loss, but I can still take profit up here at $500. So now I'm risking, you know, 2 to 1. So it can go 20 points against me. It can go, and then let's see what that looks like. So let's say 39. Let's put this down here so we don't get into it by mistake. Look at that risk to reward. My risk to reward, let's say I just wanted to come right here. $425 if it hits here and goes all the way up there. $250 if it comes all the way down here. So it's a lot better not to leverage too much in your trades and instead go with a single contract or maybe 2 contracts. Maximum, I would say, early on, if you don't have a lot of money in your account, is 4 contracts. Like, if you're just trying to be a maverick and you're just trying to be bold and crazy, you can go with 4 contracts and that's perfectly fine. But I'm tired. I'm going to go eat some lunch and I'm going to get off of here. I just wanted to show some of my newer traders, like, what it's like to get in and out of these trades and how simple it can be on the side of TradingView, right? Let's say I wanted to get in right here. If it pulls back to right here, I can just right click underneath that, click trade, click buy one, and then it instantly sets up my limit order. I just click stop loss and then click OK. It's going to come down there. I'd be in that trade and then it would push up to the upside or the downside. But I'm still doing the exact same risk to reward. So there's multiple ways to get in. Don't do stop. Stop is super weird and it'll ruin your account. Do market if you want to get in instantly, or do limit if you have a certain point that you want to get in at. Let's say I wanted to get in if it reached the top so that I can ride it to the downside, or I can get in if it reaches right here so that I can ride it back up to the upside. For me, in this case, I would get in here and I would hold it until it reaches the 200 EMA. Or at least to this point right here where you get the even lows. So you see we just broke a level just now, so it's going to continue to push down. But I'm not going to trade anymore today. I've got over almost $4,000, so it'd be stupid to hop back in here and try to trade and maybe lose some of that profit. You know, so but you guys, man, have a great weekend. I'm going to get out of here. I probably won't trade Sunday. There's really no reason for me to do so. And I will check back with you guys on Monday morning. You know, much love. Again, this is your boy Sebastian. I'm just trying to show some of the new traders. It doesn't have to be super difficult. You know, I didn't even go in there with a strategy. I just kind of knew what it was going to do for that couple of seconds. And then I took that trade. But normally I would go in with a strategy. You know, I'm trying to hit double equal highs or equal lows before I get into my trades. You know, so you have equal high here, you have an equal high here, push down, equal high there, push down. You have an equal low here and here, pushing up. Here, pushing up, you know, so stuff like that is what I use when I'm like trading. Coming off of a 200 EMA, let's check the 1 minute. So the 1 minute we hit the 200 EMA and we bounced up. You know, now we're pushing down through it. Once we push down through it, if we get through here, this 200 as a strong level of support, this thing could fall for quite a while. And we actually do have quite a ways. We're about $30 from where we started this morning, so we have quite a ways that we can actually go down. But I think the market's kind of just going to hold like pat where we currently are. Maybe we get back down to like the 30 area, maybe the 20 area. But yeah, you guys have a great day again, and that is how you trade futures on TradingView. Let's go ahead and make this smaller so we can see the whole chart. It's equal lows, take it to the upside. Equal highs, take it to the downside. Equal high, take it to the downside. Equal low, but it gets choppy afterwards. If it doesn't have a strong push up like this one does, I avoid that. If I don't see a strong push into this candle's body here, or at least into the fair value gap, I'm going to avoid that, because that usually means that consolidation is coming and we just bounced off of the 200 EMA forever. And that's not a good trade. But yeah, you guys have a great weekend. That's it for me, and I am out of here.
Ha 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 ha.